I could talk all day how great business Spotify is, and if I could purchase the entire company for $14 billion, I would do it instantly. I believe this company could be very profitable already today and to achieve 20% operating income margins over time. However, there is one major problem which makes Spotify almost uninvestable for me. When we take a look at their ownership structure, you'll see that the founders granted themselves special voting shares so that they hold all the voting control in the company. Basically, these guys are dictators. They can do whatever they want with the business, and they are not responsible to any shareholders. If shareholders don't like how the company is run, well, that's their loss, because they don't have any say against the management decisions. The founders are great at making amazing product and acquiring new customers. However, they are running the company extremely inefficiently, and it is way overstaffed. Just look at their employee count increasing year over year. I remind that this business is an app, so why do they need to hire 1,000 employees each year? I remember I could listen to any song I wanted just fine in 2013 when they had less than 1,000 employees. Even they have increased their revenues almost 4 times since 2016, the operating expenses scaled up just as fast as revenues did. The entire point of investing in software business is that revenues can be scaled faster than operating expenses to reach high profitability eventually. However, Spotify's income statement looks more like poorly run car company's income statement. I'm sure this company could function just great with their 2018 cost structure, and then operating income margins would already be around 13%. Then over time, as they scaled revenues up and increased gross margins, the operating margins could go up to 20%. They continued their rapid cost increases in 2022, mainly related to increases in employee expenses. R&D is up by 47%, mostly related to employee cost. Sales and marketing costs are up 41%, of which 122 million were employee and travel costs. General and administrative is up 43%, of which mostly were employee salaries and training costs. If these cost increases were actually something that would lead to growth over time and make positive return on invested capital, I would be totally fine by it, and if they decided to run Spotify at break even, as long as they scale the business, I would totally support that as well. However, I'm not fine when they decide to overstaff the company. It will just increase bureaucracy inside the company and raise their total cost structure so high that they may not ever be able to achieve profitability. This is total capital destruction. I really don't know what these guys are planning to do with the business over time, and maybe eventually they will have to slow down with scaling cost to turn it at least slightly profitable. But I don't think these owners will ever try to optimize this organization cost structure. Who knows what they will do? Maybe after 10 years, they will start spending all of their profits to some Metaverse 2.0, like Mark Zuckerberg is currently spending his investors' profits. Or maybe they will turn Spotify into charity and donate all of the profits for good causes. It would be great for society, but I'm not going to invest my personal money for that. Under these two Swedes' ownership, I assume in my valuation model that Spotify will achieve 3% long-term net income margins after 5 years. Growth rate will average 11% over the next 5 years, and after that it will slow down to 7%. This would give total valuation of 5 billion euros. However, if this company was under management, which could run it efficiently, I estimate that they could eventually reach the 15% net income margins. This would offer a market cap of 26 billion euros, or 2 times the current stock price. It's sad how poorly Spotify is financially managed, as it is great product, and it should also be great business model, currently trading at extremely attractive valuation of almost price to sales of 1 for such a great company. I'm happy for all the employees who benefit from the generous overstaffing practice and received great high-paying jobs. Also, it's great for the local economies where the employees are located. However, this stock is not something that investors should touch. Sometimes dictators can be good if they are fair, smart, and their interests are aligned with shareholders. However, most often that is not the case. Thank you for listening and have a great day. Bye.